Welcome to Making Money with Laura Sanders, a name you can trust. With over 20 years of real estate experience and selling over 150 homes a year, Laura Sanders is the #1 RE/MAX agent in the state of Florida for 2021. Join us each week as we discuss how to make money through buying and flipping homes, to renting versus selling, and everything in between. To join the conversation, call in live 888-994-4995, Studio A.
Hi everyone, welcome to Making Money with Laura Sanders, and I am your host, Laura Sanders. Every week we help you talk about something that will help you make a little money, save a little money, or maybe just help you navigate this crazy world we live in. And boy, oh boy, it is crazy. So, and that's not because I'm in it, but I want to welcome Nick Fiorello with JK Closings. He is one of our awesome attorneys that we use when we are helping to sell a home or even buy a home. So, if you are selling a home, you definitely want to have representation. I mean, it does help when you have a realtor like myself that I understand the contract. So it's okay to sign the contract with me,
of course,
but not always okay to sign the contract with every realtor. Today, though, it's not just for sellers and buyers, but today is really for us to talk to the agents about what you should do when you're signing your exclusive listing agreement.
It's definitely especially with all the changes that have happened in the last couple of years, it's a stressful, let's say, area to be in, and you can attest with all the different things and moving parts in the real estate world. One of them being the changes that were made last year with the NAR settlement, and part of it was compensation related, but it had to do with these forms,
right,
which weren't substantially changed in the grand scheme of things, but now have become much more relevant in the day-to-day.
Right.
So, I mean, the listing agreement is something that's super important for agents and for sellers. You can look at it both sides here, because it's going to highlight the terms of the agreement between the two parties.
Well, you were so kind to bring us the listing agreement, right? And, when you're looking at the listing agreement, it's pretty clear cut. Now, recently, there was an agent that put "to be determined" on the price. So if you don't get a price in writing, what happens?
So the whole thing with the NAR settlement had to do with disclosures, and had to do with disclosures for buyers and sellers and for realtors. It was not like it was against realtors in general, but it was to make things more clearly moving forward. So for a listing agreement and for a buyer's broker agreement, any agreement that an agent or broker will have with a client needs to be clear, concise, and then in terms of compensation and in terms of price might be a little, you kind of work around that, but it's better and very important to have things clearly listed and objectively ascertainable regarding anything on this document, so there's no dispute later on.
So, I always cross out the assumption existing mortgage, because the likelihood that anybody's assuming that is
likely not
gonna happen. So probably, and I cross that out to make it easier for the sellers to not feel like they have all this extra to read and then focused on this, because it's saying like, notice to seller, you may remain liable for an assumed mortgage, but we're not.
For a lot of sellers and buyers too, these contracts and these forms are very intimidating. So
yes,
if you can remove some of that stuff for them, that would be obviously a little helpful, especially for the common consumer.
So the next thing is that I was always under the impression that if you sign today with me, I have 24 hours to get this back to you, whether it be via email or putting it in the mail. Now, it would be very hard to prove you put it in the mail, so I always send it via email immediately.
Email is always, I think, the preferred method, because you can show sending confirmation and receiving confirmation on all ends. So,
right,
with mailing, you have certified mail, you have all that other stuff, but
who's going to send this certified mail?
Exactly. So
you don't expect that your relationship would go bad with a seller, but it could happen, right? Especially in today's market, where their expectations are a little different because we just came out of a really crazy market.
And we saw a situation recently where there was a dispute over something early on in a listing, with the listing agreement not being signed. So, you know, these things can change, you know, on a whim. And maybe somebody feels pressured into signing something what they shouldn't, but maybe they feel a certain way with one agent or one broker or something, and something else comes up and they see something else and they're like, why am I with this broker who, for whatever reason, they might not want to be with? Then, you know, disputes come up. It could come up the day you sign it.
Okay, so if we look at Section 8, compensation, right? On Section 8, there's the A part, which talks about the percentage. So I know a lot of agents have been doing 5.5%, right? So my question is here, let's say it's 5% there. And now you come down to Section 10. Now it says seller authorizes broker. So it would really be Section A out of A, right?
They have to track each other, yeah.
Okay. Oh, they do?
No, they don't have to, but they should. So it makes it clearer if they do track each other. And then Section 10 has to do with also on the buyer side. It depends on what the seller wants to offer to the buyer, but the seller does not have to and is not required to pay the buyer's agent's commission. They're not required to offer that. They're not required to
So then
do
that
it.
would change. So that could be something like GG.
Yeah. So
then that's really not them paying commission. That's giving a credit out of the...
That's FF. But yeah.
Oh, FF,
Yeah,
sorry.
GG is the other one with the buyer's broker's
So you can't have
compensation.
FF and GG at the same time.
You can, but not
That means
necessarily.
you're
You don't-
paying a
yeah,
certain...
you don't.
So if you ended up with both, it would look like you're paying twice.
It could, yes.
And it
So,
could be construed that way, and it could be a huge mistake.
Yeah. So definitely with buyers brokers need to be very specific with their arrangement with the buyer. So
How come we're not seeing their agreements? We're just assuming that they have them.
because at the end of the day, the buyer's signing an agreement with the buyer's broker.
How do you know that they've signed an agreement with the buyer's broker?
Well, that's on them. They should be doing that, and they should be following the rules of getting a buyer's
So if
broker.
you see an
shouldn't-
agent close the deal and you get audited, because that's how you would get audited, right?
Yeah, if they didn't get what was required to be signed beforehand, but that's what's going to highlight what the buyer's broker is getting paid, because ultimately if the seller doesn't pay the buyer's broker, the buyer is responsible for that. So, but if we're going through a transaction, the buyer's saying a thumbs up and this wasn't signed and everybody gets paid, then what's the foul at that point, aside from not following the rules, if everybody's, you know, kind of agreeing to
Right,
it.
but if, let's just say, later on, they go back to audit everybody's transactions in your, like we use app files, right? In my app file, I should have a buyer-broker agreement.
Yeah, you should, and this is very broker specific too.
So if, let's say I have 3 people that I'm selling a home to, right? A dad, a mom, and a child, right? Not a child because they're buying a home, but you only have the child because they're the ones you've been showing. Does all 3 have to sign their buyer-broker agreement?
Yeah, if the child's over 18, then that child should
Yeah,
be signing it.
Right, but I'm saying, do the parents have to sign too?
If they're going to be joining the contract.
Really?
Yeah, they should be signing.
Because they weren't the one you were showing the properties to, and they decided to add them on.
What makes them, or what stops them from going to another agent?
Doesn't.
Exactly. So they could go to agent A when you've been showing the son or the daughter homes for.
I get it for that part, but I
Yeah.
mean, legally wise, like.
Legally wise, if they're going to be joining the contract as a buyer, they should be signing the buyer-broker agreement.
Okay. It's good to know.
Yeah, because you want it to track through all of the contracts and all of the items that go through the transaction.
Alrighty, well, we're going to go to commercial break, and when we come back, we're going to talk more about these buyer-broker agreements, writing the listing agreement, and what forms that we should be using and what we need to be looking out for so that we don't get ourselves into trouble. So stay tuned, we'll be right back.
Whether you're buying, selling, refinancing, or building your dream home, you have a lot riding on your loan specialist. Max Fish, a top 1% mortgage loan officer in the nation, will give you a same-day qualifying quote. Max Fish is committed to providing his customers with mortgage services that exceed their expectations, ensuring that you make the right choice for you and your family is his ultimate goal. Contact Max Fish today at 954-729-6933 or max.fisch@nwmcorp.net.
At JK Closing Attorneys, we do all of the same things that a title company does, but with the benefits of being a law office. We can help with residential real estate, short sales, commercial real estate, refinances, 1031 exchanges, and FIRPTA withholding.
Contact JK Closing Attorneys today at 954-332-3111. Again, that is 954-332-3111.
Priority One Credit Union of Florida is a welcoming credit union that makes your financial success our #1 priority. We offer lower loan rates, higher deposit rates, and common sense local loan approvals, with nationwide access through shared branching.
Hi, I'm Dina Hennessy, President and CEO at Priority One Credit Union. We are open to the community. Anyone can be a member of our credit union, and we would love to have you.
Contact us today at 954-335-5100. You can also reach us at PriorityOneFL.org. Your financial success is our priority. That's 954-335-5100.
You have been watching Making Money with Laura. For more information, contact Laura Sanders at 954-650-0827 or visit her website at theloracell.com. And now back to the show.
Hi everyone, and welcome back to Making Money with Laura Sanders, and I am your host, Laura Sanders. So I'm here today with Nick Fiorello. He is one of our supermen of, actually, didn't you dress up as Superman once for?
I think so, yeah.
Yeah, of the real estate, title company run by an attorney, which again, that's always important to have an attorney run title company because they can usually help facilitate a lot of these problems, which I know you guys do. You guys do a lot of stuff that has to do with this kind of stuff.
Well, the good news is we're a law firm. So we are a law firm that runs and issues title insurance. So
which is important, yeah.
Even different. So we can act as a law firm where a lot of these other attorney-run title companies have a separate law firm. So then they have to run things through that other separate law firm, and it gets a little convoluted. We can just run everything under our JK Closings name.
That's good.
Everything is following the same line.
That's good. That's really good. So when we do have people sign the exclusive buyer-broker agreement, right? Usually the first thing that happens with the buyer is they say to us, well, I don't want to pay you. I only want to see properties where they're going to pay us. I can't write that on the exclusive buyer-broker agreement, right?
No.
That's just something that's understood between us. So what I've had is a lot of people say to me, well, I always say to them, well, here, listen, if we look at a property and they're not paying commission, I'm going to put my commission back into the deal. I'm going to negotiate it in there. And if we can't make it work, it's no different than another home that we just couldn't make the deal work.
100%. It's just another facet of the transaction now. Another thing about these changes that now all of a sudden the Rider FF that we talked about before, that has to do with a credit from the seller. So the seller might not be paying the commission, not be offering the commission, but maybe the seller will credit the buyer either a portion of or the entire amount that the buyer would be paying.
But will the lender allow that?
Depends on what the lender's, credit limits are for each that changes for each loan, each transaction. So it's really up to the lender to be upfront with the buyer to say how much of a credit that they can get in a transaction. When I bought my house, I hit my credit limit. I had credits coming from all different ways.
Nice for you.
It was, but so I got a benefit of getting credits in different areas, but that's how I was being creative. But I spoke to my lender, got everything lined up, and then I met that limit amount, and then that's how we worked around the deal. And I had to deal with a lot of the pricing on the home. We had to mess with how it was going to be structured, and we did it. But it's specific for every single transaction. So,
right.
I mean, that's part of the negotiation. Maybe you go to that house where they have a listing and the seller's not offering commission.
Right.
But maybe they're not getting any offers because of this. Maybe the buyer doesn't want to offer on a house like that. But let's say the buyer does like it.
Right.
Then we go to the listing agent and we ask, hey, is the seller willing to give a credit? What is the seller willing to give in terms of a credit? It just depends on the transaction, depends on the seller, depends on the buyer. Some buyers might just move forward and end up paying the commission because they really love the house. Some won't.
I see a lot of buyers are paying their agent's commission though.
That's one of the bigger changes from this whole
well,
thing.
no, but here's the thing. When I say see them paying commission, like let's say the owner is offering 2%. Did you ever see people before when they had showed a 2% listing going back to the buyer and getting another 0.5%?
No.
No.
But that's now with the disclosures of these agreements. The big thing was disclosure. Now it's disclosed and it's pretty clear what the agreement was. Buyer and buyer's agent have an agreement that they're going to be paid 2.5%, 3%, 2%, whatever that agreement is in the buyer broker agreement. So now, I'm not saying an agent should or should not. Like, let's say the seller is offering 2% and the agreement says 2.5%.
Mm-hmm.
The agent's worth that 0.5% that they're entitled to, but it's going to be up to the agent whether they want to
pursue the buyer, which I haven't done that.
Well, it would be at closing, so you would be.
So if the agent's only offering 2.5% and I have a 3% agreement, do I need to change my agreement to 2.5%?
Yeah, you would need to modify it. So, which is something that can easily be done after the fact, and then that's something where you can have that conversation with your client to say, hey, if this is this case, then we'll modify the agreement. They don't have to put in an offer on anything. They don't have to. If you show them houses that they like, they don't have to put in an offer. It's really case by case.
This is just so much extra work,
I know.
Right? But let's go back to GG and FF. First of all,
so GG, if you have a seller, if you're a seller or you're a listing agent, I always tell people, hey, watch out for GG.
Why?
Because there adds a contingency for a buyer.
What do you mean it's a contingency?
So if you read it, it says that the contract's contingent on basically the seller agreeing to a compensation agreement with either the buyer's broker directly or their broker with the buyer's broker directly.
Okay.
So that's the second part of this. The listing agent or the listing agreement says what the compensation is. It says what they're offering, and then at that point, either the seller's broker, so the listing broker, is offering a commission to you or as the buyer's agent, or the seller's offering the commission directly. So this is saying that if no agreement's agreed upon between either the seller and the buyer's broker or the listing broker and the buyer's broker, then the buyer can back out. So this is a protection that if you're a buyer's agent would be a good thing to use because it helps it provides another way to get out of the contract if there's some issue with the compensation agreement.
Okay, so if you were a listing agent, right? Okay. This is interesting. Yeah, we have to go into that, the FF. Oh my gosh.
That's about a credit. So
yeah, so if you were a listing agent, how would you go about wanting your purchase contracts delivered to you?
In terms of what?
Like so in the additional boxes checked, what would you want that to look like? Would you want GG?
If I'm a listing agent, no, I wouldn't want GG. But if I was a listing agent,
you would just put buyer broker compensation in the blank addendums down at the bottom, right?
Exactly. You don't even have to put it in the addendums. What you can do is when you get the offer or when you talk to the agent, say, I'm going to send you my whatever agreement it is, the compensation agreement that tracks whatever the listing agreement says. And then that way it's up front right there. There's no question about it. You're not just getting a random offer thrown at you. You're always having a communication. Not always, but
I was going to say.
Very rarely are you getting a random offer just sent to you.
So I recently had a situation where I am paying a commission to an agent that's never shown the property. They actually had GG. Yeah, GG. No.
GG is a lot more common. FF, I haven't seen that many times.
No, I've been getting FF a lot lately. But
GG for sure. And GG, if they're sending an offer, they're probably including GG, which is the seller agreement contingency.
you know, this whole thing is so convoluted. So FF, the buyer has entered into a separate brokerage agreement as may be amended, which is not incorporated herein with whatever the brokerage is. At closing, seller agrees to credit buyer the sums described below.
So, and it even takes into account the lender credit amount in the following paragraph. So it says
Right.
if the credit exceeds the limit the lender allows, then it stops there, and then the buyer's responsible for paying the additional compensation to the buyer's broker. So it's all correlated and tied together. But that's
Wow.
why I don't necessarily like that one and involve either of those really. I mean, if you have a buyer, GG's
But
not
I mean,
that
I guess
bad,
if they
but
can take 6%,
yeah. So it's whatever the agreements. That's the whole thing. These agreements are the factor in all of these transactions, and that was the big hemming and hawing, was now that you can't just do things after the fact.
right.
These agreements and everything needs to be discussed between the parties, and that means between you and your client and between buyer and seller. Everything has to be openly, readily ascertainable, observable, blah, blah, blah.
Okay, so go back to the listing agreement, right? Which you did not include the. Did you include the compensation agreement?
I did not pay the
Okay,
compensation.
so when you have that filled out, and you have it's blank because maybe the seller says, well, if you get me an offer of this or above, I'll pay 2.5. This and below, I'll pay 2, right? Is there a way to do that on the compensation agreement?
Well, it all goes back to the listing agreement. The listing agreement needs to be clear and concise on what the payment is. And that is payment to you and payment to the buyer's broker. So whatever the listing agreement says, that's what the compensation agreement has to match.
Okay, so if somebody's thinking about buying or selling a home, what's a good way to reach you?
You can call at 954-779-5000, or you can email me, Nick, at jkclosings.com, or generally we have a legal email, legal@jkclosings.com.
And if you're thinking about selling or buying a home and you want the best realtor out there, it's definitely me, Laura Sanders, RE/MAX Direct. You can call me at 954-650-0827, and you can also reach me on the web at www.laurasell.com. And I would say that to wrap this all up, number one, call Nick.
Definitely.
I'm wondering, what's your outlook on this in the future? Before, we have a few more minutes left before we leave. What's your outlook on the future on like this lawsuit, like what you think is going to come out of this, with all like making sure people are following these forms?
I honestly think what they've done so far with the forms has been productive, because it's not leaving any room for questions. Obviously, there's probably going to be changes to something, because there's going to be a lawsuit over something in one of these forms. But the forms didn't really change. It's just now making people follow procedure a little bit more, so then there's not a consumer out there that says, hey, my realtor took advantage of me. They can't, because now it's disclosed.
Right.
Everything is disclosed.
Well,
so in a way, it's protecting the realtors.
and so when I guess these sellers are signing these listing agreements, right? And they're saying in the listing agreement, it says that the commission is negotiable, right?
Yeah, in both of those documents, the whole big thing is that commission is negotiable.
Because people are going to turn around and say, oh, you never told me that.
Well, before, the whole premise was the seller paid buyer and seller commissions.
But
That
they're
was
still
the-
they
They still are paying because it's the standard, but they don't have to.
I actually have a client that's moving here from, where is she moving from? Texas. And she's paying her realtor their commission, and their realtor's paying their realtor their commission.
Yeah, I mean, that's...
Yeah. And it's like, it's funny though, I think we're just spoiled here.
Yeah,
Yeah.
it's a good place to be.
It's very rare that I get a question like, oh yeah, I have to pay you commission too, right? I'm like, wow, I like those people.
Well, now with the buyers, now they're starting to ask questions like, but I think the general consumer is understanding that they are, at the end of the day, responsible for that commission if the seller's not offering it.
Yeah, but then you got to be able to afford it. Yeah.
Yeah, but the seller's
Right.
Go,
so which, in the end, you can just ask for closing cost credit.
You
right?
can maneuver it however you want, but the seller's realistically going to have an easier time selling their house.
Right.
If they're offering to pay the commission, because that could be thousands and thousands of dollars that the buyer might not have to be able to buy that property.
Right. Well, again, if you want to, if you have more questions about this, you can either give myself or Nick a call. And until next week, thank you, like always, for listening to Making Money with Laura Sanders. Have a great night.
Thank you for tuning in for Making Money with Laura Sanders, a name you can trust. To join the conversation, call us at the studio, 888-994-4995 Studio A, or contact Laura directly at 954-650-0827. Laura Sanders, a name you can trust. We look forward to seeing you next week.